Strong gains across the board as the Nifty inches back towards that 26,000 mark, very close to that, 50 points away. Oil and gas realty stocks are top gainers, while pharma and FMCG too see some muted action.
Kotak Mahindra Bank slips in trade following its Q2 results amid concerns over valuations. The bank's net interest income grew during the quarter, while the profit declined. The asset quality largely stable.
Go forward surges 5% as the top F&O gainer today after the company beat street estimates. The management tells CNBC-TV18 they're very close to achieving the $2 billion revenue run rate. Clark's too gains as the second quarter constant currency revenue grows and the board announces a buyback of 6.5 lakh shares.
SBI Life gains over 3% as the company's Q2 beat estimates on most parameters with its new business premium up 27%. SBI Card, on the other hand, falls short of expectations in the second quarter. It's down close to around 3%.
Zen Technology is down nearly 5% as the company's EBITDA and revenue declines in the second quarter. Meanwhile, Brigade Hotel surges after the company's second quarter sees a profit jump of 58% led by lower finance costs.
Well, hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam, and it's a good start to the week. The Nifty, as you can see, is surging along. It's up more than 160 points. The Nifty Bank is participating as well as the breadth of the market, looking quite good. So, Mangalam, a good start to trade.
A good start indeed, and it's good to see the Nifty Bank participating after a couple of days of, a decline that we saw from the highs for the Nifty Bank. So it's led by a lot of the larger banks. HDFC Bank is at the high point of trade as we speak. But the broader market banks also continue to put their head up. So we have something like a Canara Bank, which is at the high point of trade. A lot of the PSU banks doing extremely well. And Federal Bank, in just the last few minutes, has seen a big surge. Federal Bank, too, has moved to the high point of trade as well. Where do we go from here? Let's get in Shivangi Sarda of Motilal Oswal Financial Services for a quick technical check on the market. Shivangi, the last time we crossed past that 26,000 mark, we saw some bit of supply. After which we saw some demand at lower levels, not too low, around 25,800, 25,750 itself. Now we're on our way back up. Do you think this range-bound trade will continue, or at current levels it is better to expect a breakout from here?
Very good morning, Mangalam and Nigel. Thank you for having me. So, absolutely rightly said, we are on our way up, and we've seen that in the last two trading sessions, after touching an immediate high, Nifty index, faced some sort of profit booking. But the good part is that a lot of put writers were strong at 25,700, which did not shift base and acted as a rebound level for the Nifty index for the bulls to buy in again. And overall, we've seen that, even though there was profit booking, but, stock-specific action continued to keep the broader market up. The strength was clearly visible. So we are going with buy on decline strategy. Of course, we are into the monthly expiry week. So a lot of volatility and, momentum will be expected here out of this week. But overall, 26,250 is what we're expecting for Nifty index immediately. And then, to surpass the immediate lifetime high levels. But this two-day dip has been quite healthy for the index with a support of 25,700 marks. Talking about Bank Nifty, of course, this has been an outperformer and, this has contributed the most in this entire rally. We are going with buy on decline here as well, with the strength continuing in the PSU and the smaller banking names. So we're looking at, immediate lifetime high levels. And then, immediately we're looking at 58,500 and then 58,750 odd levels for Bank Nifty with a support of 57,850 marks.
Okay. All right. Hi, Shivangi. Good to see you. And as always, what's the view on Reliance Industries? The big boy is finding its form. If I pull up the last 10-day chart, you'll see it's actually been the outperformer. It's doing bulk of the heavy lifting. Where's it headed?
Of course, Reliance has done a lot of heavy lifting from the last 3 weeks, and we've seen that short covering has led to long build-up now. The stock has surpassed its key exponential moving averages as well. So, you must have seen after a lackluster move in the last 60-odd trading sessions, it's come out of its consolidative band at the higher zone of around about 1430 levels. So now, which is now acting as a support level. So clearly the role reversal has happened here, and we are actually looking at the immediate levels of 1500 and then 1520 levels for Reliance with a stop of 1460 zone.
All right, that's about Reliance. But what are the other stocks that are, you're flying into your radar today, this morning, as you expect the markets to move higher? Any particular trades?
Yes, Manglam. So, having said the strength in the bank Nifty, we are going with the first preferred pick with Federal Bank, which has seen a fresh breakout today of the Poland flag pattern formation on the daily basis. Even on the weekly charts, we've seen that from the last 4 weeks, follow-up has been extremely strong. And the kind of volumes that we've seen this month so far has been exceptionally high. Of course, it's recouped most of the losses of the previous months, and of course, on the yearly basis, also the stock has been one of the strongest out of the entire lot. So, strength both in the immediate and the long-term basis. 245 is what we're looking at for Federal Bank immediately, and 230 is the support that we have to look out for. The second pick would be Bharti Airtel, which has seen a short covering move, and we've seen that RSI is turning positive for this one with a breakout on the monthly basis, which is giving room for a more upside here. It's quite sustainable stock, and any declines have been utilized for buying opportunities. So we're recommending this for an upside of 2160 levels for Bharti Airtel with a support of 2040 levels.
All right, Federal Bank and Bharti Airtel. Do you have a view on HDFC Bank? HDFC Bank is too doing fairly well in today's trading session. In fact, if you look at the contribution to the Nifty Bank, HDFC Bank, by virtue of its weight, is the top contributor on the way up today. 425 points higher on the Nifty Bank, a large part of it coming in from HDFC Bank. Do you think 1,000 rupee that it's crossed today is an important mark?
Absolutely, Manglam. If you look at the heavyweight, the pillars of Bank Nifty, in fact, even if you look at the ICICI or Kotak Bank, they have underperformed, but HDFC Bank has been one of the most resilient names in the entire banking private space name. So definitely this is quite strong. And we've seen that, the stock has actually consolidated from the last 4 months. So this consolidation is, calling in for a good up move here because it's getting ready to break out from its higher band. So HDFC Bank, we're looking at the next levels of around about 1040 zones in this one with a support of 990 levels.
All right, Shivangi, final question before we let you go. You have Coforge is higher in today's trading session, posts its results. Even eClerx actually is quite strong. But FirstSource is a stock actually that's also moving on very large volumes. How is FirstSource looking on the charts? Because that one has popped up. Let's get the intraday chart of that stock up for our viewers. It's up, I think, more than 5%. Any view out here? And currently at the high point of the day?
Of course, there's a lot of momentum that has been seen in this entire, space. If we talk about this stock specifically, of course, we've seen a lot of momentum today. The stock is up by more than 7%. But the stock has also come out of its consolidative band of the last 18 trading sessions, which has, caused a price volume spurt here. Now, the volumes have also added, so which confirms the up move here. But then it is important for the stock to hold above 342 levels, which is also an important exponential moving average level. So till the time it holds above 342 levels, we could expect, the up move towards 360 odd levels with a support of 342, of course.
All right, we take that point, Shivangi. Thank you so much for joining in and giving us a whole host of stock ideas and the view on indices as well. As we move into a short break, the broader markets is where a lot of the action is, specifically in the cash segments. We have Spencer's Retail, which has moved higher, moving on fair amount of volumes. Force Motors is the other one, which has moved to the high point of trade. And GE Shipping continues to move higher as well. That's another stock which is up almost 3%, and a lot of volumes piling up on that one as well. Force Motors at the high point of trade. We have GE Shipping, which is buzzing around as well. What we'll do is take the short break, come back at you more on a lot of these buzzing stocks. Why exactly, are they moving around? And we'll get you some more details on that. Stay with us. 35 points away from the 26,000 mark on the Nifty. When we started the show, close to 25,950. Now we're moving from strength to strength. Let's see where we go from here. But if, there was one sector which had been buzzing over the last few trading sessions, it is the metal space. And Nigel joins in with a further update in specific on steel. Nigel, What's taking place out here?
Well, InCred, they have come out to the north and they're sounding more optimistic on the prospects, particularly of the fairest players. They have been relatively, negative on some of these stocks. Now, let's take it piece by piece. First, on Tata Steel, they have upgraded the stock to add. Earlier, it was reduced. The target price they have at around 224 rupees. They say that the company is a leverage play on India's industrial upcycle and Europe's post-war reconstruction boom. They also go on to mention that the Russian-Ukraine conflict appears that there is a negotiation underway, and we could see the end very, very closely. So they're saying that Europe is ready to rebuild the entire system out there, and that could be nearly around a $800 billion opportunity, which could push up demand for steel. Back home, that's in India, for Tata Steel India, they're saying that the policy protectionism as well as strong domestic growth, that's what's going to help in anchoring visibility all the way till 2030. They also note that, yes, the captive mine auctions may lift costs, but India's self-reliance push should hold the margin line. So all in all, they're positive in Tata Steel. Moving to SAIL, out there, they've nearly doubled the target price. Now they've upgraded the stock to add. The target price moves to around 158 rupees per share. And they say the company is a tactical play on the protectionist stability, not just a cyclical upswing. They also go on to mention that the company is fully integrated on the iron ore front, which is a key built-in advantage. Operating leverage drives recovery, volumes are likely to rise. The finished steel as a proportion of the mix, well, that could move up as well. And staff costs could inch up only marginally, which has been otherwise a bit of an issue, particularly for a company like SAIL. On JSW Steel, though they maintain their reduced rating, they have upped the target price, 776 rupees to around 939 rupees. They say that, yes, the street loves its flawless execution, but the valuations test gravity at around 4 times price to book. They also put in a couple of numbers. They're saying consensus expects EBITDA number to be at around 34,000 crores for the entire FY26. However, at the half-year mark, they're at around 40,000 crores. So they believe getting to that mark could be a little difficult. So put all this together, InCred sounding relatively more positive on the steel stocks.
All right, InCred sounding positive on the steel stocks, all of them buzzing around. Let's see where they go from here on as well. But the financial space is in focus because the RBI has announced draft rules for allowing banks to finance acquisitions. Ritu joins in with more details on the prospects of what this does for the banking sector and, more importantly, what it does for acquisitions and mergers as well in our industry. Ritu.
The Reserve Bank of India has finally put out draft rules on capital markets and acquisition financing for banks, setting clear limits and safeguards. So a bank's total exposure to capital markets, both direct and indirect, is going to be capped at 40% of the Tier 1 capital. Within that, the direct exposure, which includes investments and acquisition finance, cannot exceed 20%. And specifically, acquisition finance is going to be capped at 10% of the Tier 1 capital. Now, on M&A financing, for the first time, RBI is allowing banks to lend to Indian companies that want to buy stakes in other companies in India or abroad. But RBI says these deals must be strategic and aimed at long-term growth and not short-term profits. To qualify, the acquiring company also has to be listed, have a positive net worth and must have been profitable for the last 3 years. Also, banks can only fund up to 70% of the deal value, while the remaining 30% has to come from the company's own equity. After the acquisition, RBI says the debt-to-equity ratio cannot exceed 3:1 and the loan must be fully backed by shares of the target company as security. Next, let's also talk about lending to capital market intermediaries. Banks can lend to them only if the loan is fully secured and the collateral actually belongs to the borrower, and there is a restriction where banks can't finance them for proprietary trading or investments of their own. Now, when it comes to IPO, FPO and ESOP financing, banks can lend up to 25 lakh rupees per person, but covering only 75% of the subscription value. Finally, loans against securities for individuals. Banks can lend up to rupees 1 crore per person. Within that, 25 lakh rupees can be used for buying shares in the secondary market. Now, while bankers we've been speaking to have welcomed the move overall, called it a good start, not all their requests have been addressed. So they will seek clarifications, for instance, whether banks can finance foreign companies looking to buy in India, not just Indian companies making acquisitions. Also, the clause on acquiring company being a listed entity, the profitability and the 3:1 debt to equity cap after acquisition has also raised some concerns among bankers, especially for deals that involved distressed assets. Public comments on this draft are invited by the 21st of November, and the final rules are expected to kick in from 1st of April next year.
All right, Ritu, stay with us. Let's turn our attention to ICICI Bank. Sandeep Bakshi's term as ICICI Bank CEO, that's up for renewal in about a year. But is he going to continue after the current term? Ritu, fill us in on the latest on this front.
Well, there's growing buzz around ICICI Bank and its CEO Sandeep Bakshi, whose term is up for renewal in about a year. And the big question that everyone's asking is, whether the man that turned ICICI Bank around stay on for another term. Now, that question actually came up during the bank's recent earnings call, where an analyst from Bank of America Securities asked Sandeep Bakshi directly about his intention to continue. The response came from the group CFO, Anindya Banerjee, who said there is still time and the board will take a call and make a disclosure at the appropriate time. Now, analysts say it really depends on Sandeep Bakshi himself whether he wants to continue or not. For instance, Suresh Ganapathy at Macquarie Capital notes that while personal factors could be at play, the board seems fully supportive of him staying on for another 3 years after his current term ends in October 2026. Now, under RBI rules, private bank CEOs can serve up to 15 years or until they turn 70 years of age, and Sandeep Bakshi at 65 years is well within that limit. Now, since taking charge after Chanda Kochar's exit, Sandeep Bakshi has led a remarkable turnaround for the bank, and investors have also rewarded that. For instance, ICICI Bank trades at 3 times its expected FY26 book value, higher than HDFC Bank's 2.7 times. So if Sandeep Bakshi decides to move on, Macquarie points out to Rakesh Shah, a long-time ICICI Bank executive, as a possible successor. Now, in response to our query on the matter, an ICICI Bank spokesperson said that the board will take a decision on the matter at the appropriate time.
Okay, all right, Ritu, thanks a lot for that. Well, here's a quick note for all our viewers. If you'd like to access expert-driven insights and actionable chart patterns, simply scan the QR code which is up for you on the screen and subscribe to Money Control Pro Super Pro and get daily expert calls, actionable charts and insights to power your investment decisions. Plus, the festive season, there's more reason to celebrate. 10 lucky subscribers every day will win 1 gram of gold. So don't wait. Scan, subscribe, and make your portfolio shine brighter with Super Pro.
Welcome back. The market continues to do, well right now, 150 points higher on the Nifty, but a lot of shareholder lock-ins are ending today, and as a result of which we may see some action on stock prices. Which are these companies and what is the lock-in which is ending? Nearly $2 billion. Hormaz joins in with that list. Hormaz.
10 companies and as you mentioned, almost $2 billion, so 17,000 crore almost, and a lion's share of that coming from one single company, Vari Energies. That stock is up and about in today's trading session with shares of almost 16,000 crores that are freeing up for trade. Of course, we need to highlight the fact that the shareholder lock-in ending does not mean that all of those shares will be sold in the open market. Of course, they only become eligible to be traded. But among the other companies aside of Vari, most of them are recent listings. Atlanta Electricals was one of them. Shares worth almost 150 crores freeing up for trade. That stock is down today, but has done fairly well from its IPO price. Sensex Technologies is another one. Shares worth almost 112 crores freeing up for trade. That stock is not doing much today, but is down almost 10% from its issue price. Another stock that has done well as a recent listing is GNG Electronics. Here, the 3-month lock-in period ends. Shares worth almost 100 crores freeing up for trade. The stock is up almost 40% when compared to its issue price. Now, some of the names that are not doing so well in comparison to their IPO price, IndiCube is one of them. Here, shares worth 150 crores free up for trade today as the 3-month lock-in ends. Jaro Institute was down 25% from its IPO price going into today's session, is down another 6% today. And here too, the 1-month lock-in ends. Shares worth 54 crores freeing up. Solar World Energy as well. Shares worth 100 crores getting eligible to trade. Almost 31 lakh shares free up as the lock-in ends. Anand Rathi, that stock has done well as the recent listing. The shares in stockbrokers unit, shares worth close to 140 crores becoming eligible to trade. Ganesh Consumer, shares worth 50 crores become eligible to trade. The stock has is down from its issue price. Brigade Hotels is up and about today, is up around 3.5–4%. Here too, the shares worth almost 150 crores free up for trade. And of course, as I mentioned, Vari, almost 4 crore shares become eligible to trade worth almost 16,000 crore rupees. That stock is up almost 130% from its IPO price and doing very well for itself in today's session as well.
All right, Hormaz, thanks a lot for that. We take that point. A couple of stocks which are coming off the day's high right now include the likes of BHEL, Exide, Hinzinc, and GMR Airports as well, which is currently at the low point of trade. No problems for the market though. All major indices fairly and squarely in the green with the mid caps and the Nifty Bank outperforming. With that, we take your leave on this edition of Chartbusters. Stay with us. The team of Trading Hour comes up next.